Morning, Chris.
Hey, what's happening, Brian?
Not much. I'm Brian Jones. I'm here with Chris Hood, professional trader, world's most interesting man, and we're just gonna chat about the market. What's going on?
Hey, man, not much, except we still see this interest rate debacle going on. Man, it's just crazy. I wonder if anyone is actually sitting there with the script document and actually handing it to Jerome Powell. Like, you almost wonder that if the lackeys that are sitting around him are actually handing him the document or are they shredding it? Like, give him the script, man. Come on. It's
Yeah,
crazy.
it's. I was watching that one day when the market just was that a couple days ago when he gave a speech, and it's just like all of a sudden it just came to life.
Oh man, there was that day where he didn't say something. That one 2 weeks ago or 3 weeks ago, it was literally the guy gets up, doesn't say what the market expects, and it's just this waterfall, man. It's just straight down the toilet. And then 2 weeks later, he gets back on, and everyone's waiting for him to say something. He says absolutely the same thing. He doesn't even say anything else. Market takes straight off like this. It makes you wonder if there's a script at play. Like, are they just playing with us, or who knows? I don't know.
I wonder if. I mean, I know this is obviously illegal, but the people that make these announcements obviously have investments.
Well, ask yourself this. Here's the thing. All these people that are senators and what have you, right? They are public servants. They get paid a salary from the government, etc., etc.
Yeah.
How on earth, on a salary, do you amass a net worth over $100 million? Like, you can't.
It'd
It's
be
impossible.
useful. It would be really useful if you knew what someone was going to say before they said it.
Oh, for sure. But the thing is, the thing that I find interesting is the laws of the system tend to target the weakest people. They don't target the people that seem to be controlling the knobs and everything behind the scenes, right? So, I always find it amazing when I see people like Nancy Pelosi, who's got, $100 million. I mean, how did you get that $100 million? I wonder if there's like an audit trail of how they got it. You can't amass huge amounts of fortunes on salaries. It doesn't work that way, right? You have to have had some form of advantage. So I think that the system is skewed against the poor guy. I mean, look at what happened with this whole Robin Hood thing and how many retail traders got nailed and everything. Do you think they're going to get their money back, the ones that lost, because the brokerage shut down their trading? Oh, I think it's all crooked.
Well, I mean, what I think is interesting is how many books that these people are able to write like immediately.
Oh yeah.
I mean, it's like they've just got an army of writers, that just like throw out these books. It's like they've got a book out in like, I don't know, 2 days or something. It's pretty fun.
Look, the whole thing comes down to, like, this is why I stay out of chat groups and all of this nonsense, right? Is that it feeds your bias. Everything feeds your bias, right? So if you are predisposed to being pessimistic and bearish, you're going to seek out information that confirms that. You're never going to be looking for things that give you a contra viewpoint. Same thing if you're bullish. So I don't want to be stuck in a group of people where we all have like-minded opinions, because if we do that, it sort of cements what I'm thinking as opposed to looking at data to tell me what's going on. I can't argue with data. Facts are facts, right?
Right.
But when it comes down to opinions and, all of these chat groups, unfortunately, are just, I go in and I sort of read the Reddit stuff, and I go onto Wall Street Bets for entertainment. I use it as washroom break entertainment, right? So most people,
it's a guilty pleasure.
Sometimes, just sometimes listening to some of these people, and how they talk and how they frame things, I'm just like, man, you're going to win today, but you're going to lose tomorrow. And it's such an interesting point. The market doesn't care, right? And what it does is it rewards at times bad behaviors. So sometimes stupid mistakes make money. And the problem is a lot of people haven't got the sort of transactional maturity to be able to look at that and go, hey, that was actually a bit of a free pass. I got a win here. I shouldn't really have got a win, but I'm going to take it. What they do is they go, that worked. I'm going to do that again. And then the market rewards them again. And then they go, you know what? I'm pretty good at this. Even though I'm winning, I'm going to triple up now. And that's the moment they lose everything. It's uncanny how this happens. And I see it all the time with beginners, because there's always, when you go online and you see people advertising, hey, come to me for 5 minutes and I'll show you a hack. I'm like, there's no hack to this. If you don't have a system and all you're doing is just randomly going on a chat group, and, this guy in Tulsa, Oklahoma went and bought 9 million shares of a stock that's trading at 0.00. I saw it last night. I actually went and had a look at the stock last night. The stock was trading 300 million shares. 300 million shares, but a share cost 0.004 cents. It didn't even cost a cent, right? So people were buying like 500,000 shares for $50 or what. It was ridiculous. And these guys are selling it to themselves. It's this little group, and this guy would buy it for 0.004, and he sells it to his friend for 0.0045. And that's not trading. That's just stupid, because at some point, someone's going to be left holding that bag of 300 million shares, and no one's going to make any money, right? So you've got to be careful. I think that at this point, there's this oversupply of simplicity in the market. Everyone is sort of, this is easy. If you trade consistently, one trade on GME does not make a career in trading. And that's the hard thing to sell to people. Trading is about consistently making money, not, every 400 trades you knock a ball out of the park. It's like, how did you pay your rent, during the 399 trades that didn't work? You'll run out of money before anything happens. So
for sure, it's not, you can't just restart the video game. It doesn't. Well, most people can't. Most people don't have the capital to just start over.
Most traders, most of the people that I know that have traded for a long time have blown out their accounts at least 3 times. At least. So if someone comes to me and says, I've been trading for 6 months, the first question I'm going to ask them is, how many times have you actually lost all of your trading capital? And if they go, I've never lost it, I go, okay, well, come back to me when you've lost it 3 times, because then at that point, I know that you've learned enough to be able to be taught. The problem with a lot of people today is that they go online and they see, this guy made 25 grand on GME, that guy made 500 on AMC. They see that as, if that guy who's a world-class idiot could make it, well, so can I. There's the so can I kind of mindset. It's like in jiu-jitsu. It's the classic thing where you go to the pub and you tell a guy, hey, yeah, I've been doing jiu-jitsu. And he goes, I can do jiu-jitsu. And they go, well, how can you say that? He goes, I played football. It's like, okay, well, that's a completely irrelevant skill. Let's go get on the mat. And then you get on the mat and the guy's like a fish out of water. He's just flailing around. Same thing happens in stock trading. Same thing. Guys will flail around, seek out confirmation. This is the biggest risk that you run as a beginner trader, is you seek out people who are doing the same as you, who might not even know any better. So if you've got 10 people who all are blind and you ask, where is the exit? They're all going to be hitting each other in the dark, right? So I think that they've got
the blind leading the blind in those groups. And it's like there's a certain group think going on as well. Where even if somebody has like a good idea, it'll probably get swallowed up.
Look at how many people, with the whole GME thing, I hate going back to it because it is such an anomaly in the whole sort of scheme of things. And in 6 months' time, we won't even be talking about it. But if you look at what happened there, it was almost like you go onto that Reddit board and you actually read the chain of conversation, and you'll see there were a whole lot of people saying, hold, 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 hold. Those guys who were saying hold were the ones who were selling. So it's disingenuous, right? So you're getting advice from people who are talking for their own interest, right? They're saying, okay, I want you to hold so I can sell to you, right? That's the sort of logic behind it. We traded it in our group And we made a couple 100%. And that was what our goal was. Our goal was not to take it from, $5 to 400, right? We had one or two clients that managed to hold on to some of the long call options and they made a lot of money. But the thing is, that wasn't the plan. And if you don't have a plan and it's this random thing, what happens is there's still people out there who bought GME at $483. Now, what do? It's now trading at 200. What do you do? Are you going to hold it now with the hope it's going to go back to 400? What happens if it goes to zero? How much did you put in? All of those questions never get answered and they never get talked about. People only talk about the result. Oh, he made so much money. And then I watched a show on BBC where they interviewed a guy who lost, I don't know, $15,000 or $20,000. They never talk about the people who are stuck in this mindset of continually repeating the same problem over and over again. So, this is the whole point about putting together a proper plan that knows who you are. Because if you don't trade to your personality and bias, you are literally walking in like the guy from the bar, having played football, and you're going up against a 4th degree black belt in jiu-jitsu who's going to, a lady. It's a 6'6" football player thinking he can do no wrong, getting beaten up by a 5'1" black belt woman. That's what's going to happen. It's like, how could that be? How could that be? But it was pretty obvious from the beginning.
Yeah, absolutely. So we've been this has been an interesting couple of month. You said February, March were generally strange and unpredictable, and to trade small and to watch out for sell-offs, things like that.
Generally Fridays, like in March, what we tend to have is, so we had the triple witching on Friday. All right, or quadruple witching. And we have those 4 times a year when everything sort of converges on an expiration date. Futures, index options, ETF options, stock options, all of those things all sort of mature at the end of the day, right? There's a reason why March is quite volatile, and it's the end of the first quarter. We're a few weeks away from from the next earnings season, right? So that's coming up. A lot of the mutual funds need to rebalance. So you're going to have people. That's why what happened with Facebook on Friday looked very much like we haven't got enough Facebook shares. We better add a couple. It was literally these big money guys going in going, crap, we haven't got enough. We need to buy some more. So there's a lot of this rebalancing that goes on. And what happens in this mix, it's like a washing machine. So you have all these trades happening in and out, in and out, in and out. And all the retail people, and this is, seriously, if you're a retail investor and you're hearing me out, just this is where you got to pay attention. It's a washing machine. And the people who control the speed of the washing machine are not retail, right? So we're inside the machine, not outside the machine. And these guys are throwing in detergent and they're throwing in some vinegar and they've got borax or whatever it is, okay? We're just a stinky ghee. We're a stinky jiu-jitsu ghee that's been thrown into the wash and we're just getting mangled, all right? You have some people that go, oh man, this is going to be permanent. I'm going to go buy some put options. And what happens on these expiry days is the premium spikes. People buy the spike because they think the volatility of the washing machine is going to continue. And then they take the volatility out because they push the button that goes stop the spin cycle. And when they stop the spin cycle, all those put options that these little monkeys went and bought while they were sitting inside the washing machine collapse in value. And that's how you lose, is you're playing the washing machine spin cycle and not the guy who's pushing the button. So you've always got to remember, there's a guy pushing the button. You have to remove yourself out of the washing machine and go, who's pushing the button? And why are they pushing the button?
So this is a really good question that people may be interested in is, options obviously are a lot different than stocks. They behave differently. Yeah. So you've got the value of the stock going up is going to raise the price of the option most of the time with the delta. You've got the theta decay. Well, let's talk a little bit about volatility. What goes into the options pricing volatility?
So volatility is expectation. It's just a measure of expectation. It's what people expect. It's what the market expects the stock to do. So if the market is expecting the stock to rise, volatility will start to rise with it. It doesn't give you direction. Volatility does not determine direction. It determines amplitude. It's telling you that the market says the stock could move up this much or down this much. It doesn't tell you, oh, it's going to go there. No, that's not what the market does. The market works very much undirectional because it allows you to choose which direction it's going to be. And that's why you need to have a system that looks at different signals that give you more confidence in terms of direction. So there's a lot. We use the squeeze, people use the ADX, they can use MACD, they can use whatever it is. There's a lot of signals that can give you confirmations of your bias. So if I had a bias that said, well, I think the stock's going to go down, I can tell you, I can find 20 indicators that will tell me the stock will go down. And I can find 20 indicators that will tell me the stock will go up. But if you don't know which one of those signals happens to be historical, which one happens to be forward-looking, which one is binary, which one is compound, you're not going to know which signal to trust. All you're going to do is have, but this, no, but this. And then you end up doing all of this sort of up and down, right?
So volatility, that also changes a lot of the indicators, makes the indicator go wild.
It can. So what volatility does is it just tells you expectation. The market has an expectation that the stock is going to go up. Great. So when volatility is suppressed on a stock, all right, when the market doesn't expect the stock to be moving big, there are certain strategies that work better. All right. You don't sell volatility when it's cheap. You sell it when it's high. You don't buy volatility when it's high. You buy it when it's cheap, right? So there's certain trades and certain types of strategies that are going to do better in certain markets on certain stocks at certain times. If your plan does not have that, all right, if your plan is just, I sell iron condors, okay, pretty good strategy in a choppy market, but you don't recognize when the market starts to shift and you're selling that strategy, you're going to lose because you're going to get blown out the water all the time because you're not going to set your strikes correctly. If your strategy is, I sell naked puts, and you can sell naked puts really well in an accelerating market that's in a strong bullish trend, and now all of a sudden the market starts to level off, that's going to kill you. So you have to have strategies that accommodate the environment that you're in. And that environment doesn't send up a flare and go, hey, look at this now, everyone change. No. It doesn't give you those warning shots. You've got to know how to determine it. So we look at things like market stage. Where is the stock in that stage? Is it accelerating? Is it decelerating? Are the stocks being sold mainly? What's happening with price? So we look at that. We then look at the exponential moving averages. All right, and exponential moving averages have a higher weighting on the most recent data in terms of price action. Is the price above the moving averages? Is it below? That indicates trend. If it's above the 8, we know short-term price is moving up. If it's below, we know price is moving down. We look at things like the squeeze. I find the squeeze indicator when the Bollinger Bands compress inside the Keltner channels and we have the stock that's sitting there in this little bubble ready to explode. It's one of the only indicators I've used over 20 years that has been consistently accurate. Now, I don't say it's 100%, right? Because squeezes don't always fire in the direction that you're looking for, right? They can always repeat themselves. They could be coming from a short and then short again, right? But once it fires in a particular direction, once the Bollinger Bands flare open again and the stock starts to rise or fall, you can be pretty sure that within 4 to 7 candles on the histogram, we're going to get directional movement. So I know that there's going to be, if it's a day chart, 7 days of movement. If it's going to be an hour chart, 7 hours of movement. So I can see that.
So it gives you an indication. It gives you an indication that there's going to be movement in some direction.
Yes, it tells you something's going to happen, right? So when you trade for edge. You trade for an advantage. Like if I was going to roll with you in a 5-minute round, I'm going to carry a billy club and a knife, right? So that's the edge that I have. So every time you do something, I'm just going to, poke you a little bit, right? Just on the ribs, right? That's my edge. If I grind an elbow in someone's face, it's an edge, right? if you trade in the
remind
market,
me not to roll with you.
no,
Like you're the guy with all the knives and stuff.
Well, you know what? I'm from Africa, man. We get born with guns, like we are gunslingers, right?
Yeah.
So the thing is, if you're trading without the advantage, all right, so you just go in because your buddy sent you an email going, hey, I'm doing this trade, and you go in and do it. You have no advantage on price because you don't know where the price is, right? You just bought it. All right? You didn't look at a chart. You didn't see where it was on the Keltners. You didn't see anything. You have no advantage on the other guy. Remember, the market owes you nothing. And the person on the other side of the trade has a contra bet to you. So if I've bought something, someone sold it. That's the way it works. If I've sold something, someone's bought it. I need to win, and that guy needs to lose. That's what we're trying to aim for. Both of us can't win. It's not the way the market works, right? His job is to take money out of my pocket and put it into his, and mine is to take it out of his before he can take it out of mine. That's how the market is. Very, very simple.
You just hope that you're the opposite side of the trade is one of the Reddit guys and not some sort of.
I hope it's someone who's got less experience, right? The problem is, here's the problem. 90% of the time, the guy on the other side of the trade is probably going to know more than me. Just the way it works. So if I haven't done my homework, what it's basically saying to the guy is, look, come and roll with me, but I'm going to take my leg and I'm going to tie it into my belt, all right? And then I'm going to take my arms, I'm going to stick them into a straitjacket, and I've told you that I'm going to choke you out. Can't move my arms and I can't move. I've got one leg. I'm like that knight in Monty Python and the Holy Grail when they're crossing the bridge, and I've gone, it's a scratch, and they've taken off my arm, right?
Just a flesh.
I'm not going to win. I think I'm going to win, but I'm not going to win. And it just comes down to a trading naivety, all right? And this is where, I really don't like these ads that say, this is easy. Anyone can do it. If you can spell dog, cat, and truck, you can do trading. I mean, that's exactly how it's gone now, right? It's not like that.
What do you think that?
Sorry.
What do you think? Like the three top characteristics that you would say for somebody who's going to be a really good trader? Like if you had to say raw material wise, like what would you think that the three biggest things? I know it's a hard question, probably.
I would say one of the things you have to have a bit of a. I think of trading like jiu-jitsu. Like this is the way that I look at it. There's a lot of similarities between the mindset required to learn Brazilian jiu-jitsu and learning how to trade. And it's a hard grind. It's not easy. This stuff is complex, right? But everyone has a different game. Everyone has a favorite way of playing. Some people like the bottom, some people like the top, some people like the side, some people like whatever. Trading can modify to you. All right. And you can modify. Most people try and modify to trading and not the other way around. I'm not hyper athletic. I'm a big guy, but I'm not athletic. I cannot do half of the stuff that a flyweight can do. I can't do it. If I put my legs over my head, I'm stuck there. You'll call 911 and they'll have to fold me out, right? There's that scene in The Naked Gun where O.J. Simpson is in hospital and shot, and Leslie Nielsen's character dumps his head onto his crotch and he folds the bed. That's what happens to me, right? I just get stuck. So
such a great movie.
I was letting my 8-year-old watch it the other day, and when he's driving in the car, he says, everything reminds me of this girl. And then those two things with the, I thought that, not appropriate for 8-year-olds, but anyway, Father of the Year. That's what I'm saying. Yeah. No, I think that the most important thing in trading is a willingness to be open to accountability. Because most people don't like to be told that they can't do something, number one. And most people don't like to be corrected. So those are trading is just as much ego as jiu-jitsu, right? So you walk into a school, you don't want to lose, right? And it takes how many years of jiu-jitsu training to realize that losing is actually part of the game, right? And so jiu-jitsu and trading have the same thing. Once you've accepted loss, as a natural part of the whole development process, you'll be a better trader. So someone who can accept not winning all the time, that's step number one. Step number two would be, you've got to be pretty level-headed. Like, you can't be emotional about the intraday. The biggest problem for beginners is that they go in and then they get so excited. It's like this excitement. Now I'm a trader. And they turn on the 5-minute chart. And suddenly you hear tick, 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 tick. And you see the price going down, 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 down. And you go, damn it, I shouldn't have done it now. I should have done it later. And then the questions start coming into your head. And then everything falls over. And then at the end of the day, the price is exactly the same where it opened. And that 5-minute chart disappears. And there's none of it. But you went through this emotional roller coaster like this. So you've got to be pretty controlled, like level-headed.
Emotional control is pretty important.
Absolute. EQ is the most important thing in trading, because if you see a red thing on your screen, you can't react. You know, it's the same thing, you know, in jiu-jitsu, when you've got some guy who's like a squirrel jits, you know, the ones that get on top of you and like everything. They just want to hit everything. They're trying to tap you out by, you know, eyelid armbar sort of thing. They'll like target your nostrils and they just go for everything. Right?
Actually,
you know,
I was sparring with someone the other night, and I was giving him some. He was getting better. He's a blue belt, and he was wondering I don't know. I mean, I just kind of go in there and full roll sometimes. So he got mount right, and I'm just laying there waiting, and he's wearing himself out, like starting to do stuff, and I'm like, just do why are you moving? Like, why? I'm not even trying to escape. Like, why are you just spazzing? It's like, just calm down and like pick a move and set it up.
We got a lot of beginner traders tend to do that. They tend to throw everything. They throw their whole wad out at everything. They blow up their account by having 100 positions. They don't know what to have done, what they shouldn't have done. So people just get overzealous, right? So they go in and they go, oh, this looks good. Everything looks good. And when everything looks good, you run out of money. Because I can tell you, there are more than enough trades to keep you busy. The thing is, how do you become discerning, right? So you've got to be able to just have a quality control. You've got to be able to say, you know what, I'm only going to go for the high probability moves. It's just, you know, a white belt will go for everything, even if they crap at that, right? They're going to do Kimuras, they're going to do everything, right? You name it, they'll go for it. They fall for every setup that you give them. Then the blue belt comes in and he's like, no, I'm not falling for that Jones trick again. The last time I went for a Kimura on him, he face barred me or whatever it is. And, you know, then the purple belt comes in and he goes, you know what, I'm going to do the same back to you. So now the game is starting to get a little interesting. And then the brown belt comes in and he goes, well, I'm not only going to fake you, I'm actually going to aim for you as well. I'm going to set you up 4 moves away and what have you. So it's like trading is like chess in that way, is that the more beginner you are, the more you have a tendency to just throw everything and hope for the best, right?
Not be selective.
Generally with people who do that, they don't paper trade, right? So if you're a white belt, just paper trade for 30 days. Just paper trade for 30 days.
That's like drilling. That's like drilling on the mat.
Just drilling.
Yeah.
Get used to your cardio. Understand how you breathe when someone's crushing your chest. You know, all of that stuff you do with paper. There's no need to rush into trading. I honestly encourage us, don't rush. The market will be there. There will be trades of a lifetime many times over in your trading career. You've got to just start off the right way. So learn to shrimp, learn to breathe, learn to, you know, do that. That's white belt. Once you get to your blue belt, you've got 3 or 4 moves that you learned at white belt that you're really good at. Bull put spreads, a call debit spread, maybe a condor, maybe a butterfly, I don't know, whatever. You've got 3 or 4 techniques that are your go-to techniques. Same thing in jiu-jitsu. You got your go-to techniques. You're not really good at leg locks yet, but you're going to get there, right? Then you get to purple belt. Got a couple more moves. You can understand a couple more things about the market dynamics. You practice and you keep drilling. Just because you know a purple belt doesn't mean you stop drilling. You keep drilling and you've got new techniques that you bring in all the time. Same thing in trading. People are too quick to try and become a billionaire. And the harsh reality is you won't be. You know, there's only a couple of billionaire traders that have been made over the last 35 years. You know, I haven't seen or read any person who's become a billionaire following Warren Buffett's strategy either. Strange that.
So,
and, that's why you got to do it.
So I just to recap here, because I'm very interested in this actually. So you said you need to have accountability and emotional control. So how would you kind of summarize a third characteristic? That would be.
You've got to, you've got to be willing to take a punch. Most people go into street fights not knowing what they're going to do if someone punches them in the face. That strategy of like, yeah, I'm going to beat you up. No, I'm going to beat you up. And then the guy clocks you one in the face. And then you're like, what the hell? Your whole strategy fell over, right? And, I always laugh when people mock boxers, because I always say, you know what, you could have the best strategy in the world. I'm going to pull guard. I'm going to pull you in. I'm going to do this. You know what? I'm going to punch you once in the mouth. And all of that stuff's just going to go straight out the window. And then it's just survival. Like this is the whole thing about like African mentality. It's like, we don't care about the niceties of things. We know that survival comes first. Most people are not taught survival. So in trading, you're not taught survival. Survival comes first because that gives you the opportunity to play. Once you know how to survive, so put this into jiu-jitsu. If you can't survive, you're going to get tapped out every 30 seconds. Right?
Yeah, I know like the Saulo Ribeiro, and I agree with them. It's the first thing that you need to learn how to do is basically defend yourself, and live through the match or not get tapped out or live through the fight.
So how do you survive on the trading floor? You have a plan. You have a system that says, I'm not going to be trading every single thing that comes my way, because there are a lot of charlatan trades, pretenders that come in going, look at me, and they will kick you in the nuts every time you're not looking, right? Then you've got to know how to position size. You don't fight out of your weight class as a white belt. You don't go and, I'm going to go and take that guy on. Yeah, but he's 480 pounds. He's a monster. And he's a 5th degree black belt. Listen, let me, my story about my jiu-jitsu tournament, 13 years ago in the Middle East. That's exactly what happens in trading. The guy was a 3rd degree black belt in judo. I was a blue belt thinking I could win. Look, if I had the same trading mindset at that point, I would have looked at what's my edge. My edge would have been run just disappear.
Pull out your knife.
Well, the thing is, I had snacks. I was going to put little snacks in there, and I was hoping I could just say, hey, have some chips. But that's where people really get it wrong. It's like, trading is not about a trade notification. It's not about an email from whoever. It's not about a WhatsApp message. There's such a deeper level to this that if you are not aware of it and you're getting away without being aware of it, good luck. Because at some point, the scales balance off and now everything you've made is gone. And then you've got to start all over again. So, what we want to try and do, particularly in the group that I've got, is avoid that. It can be avoided just by following a process, so that's what I try and encourage.
So you talked about iron condors as being a pretty good trade in this market.
Yeah.
And you mentioned on the webinar, you want to go through like an
iron, sure.
Like kind of give the watching the idea of how to set one of those up.
Sure. So I have a few things that I do for iron condors, right? So one of the things that I look for is stocks that I've got a little watch list that I build every day. So this one over here on the bottom left, it's specific conditions that I've programmed in to identify stocks that are best suited for condors, right? So what I'm looking for is I don't want stocks that would have a propensity to explode in price. All right. It's really important to avoid explosive kind of stocks, because if you're doing a condor, your whole idea of a condor is to keep stocks within a range, a setting. All right. I don't want the stock to move out. So there's two things that I want to do. In most markets, stocks that have got squeezes, stocks that are trading above their moving averages have an edge to move, right? They can move up, right? And I don't want them to move above my short strike on the call and below my short strike on the put, right? Because effectively what an iron condor is a credit spread on both sides, right? It's a call credit spread and a put credit spread. So there's a couple of things that I will look at. So let's open up a chart. Let's just pick out a stock that is green. So AMAT, we are in this trade at the moment as a bull call spread. We've got a bull put spread and we've got a long call, I think. So we've done everything other than iron condors, all right? And there's a reason for it. The first one is this is a slingshot scenario, right? So when we have on the day chart, let me just pull the graph out a little bit wider. When we have the slingshot, which is a movement from yellow out, right? You see what's happening here with the momentum? The downward momentum is getting exhausted. And again, so if I can see this yellow bar forming, ideally I would like a blue bar and a rising momentum oscillator here. That tells me the price is going to rise. How far? I have no idea. The market is telling me the stock is going to go up to 120.95. Now, if I look, that's the market maker move for the overnight, right? So I know the stock is going to be rising today. Where would I set my condor? It would be really difficult because if this fires long, so this suddenly starts becoming blue, this could easily be a 2 Keltner move or a 3 Keltner move in a matter of a couple of days. If that's the case, I lose on the call credit side and I will gain on the put credit side and probably come out with a bit of a loss. The
premiums are usually lower on the call side, right?
Yeah, so what I would do is I would look at setting it this way. I would do a double leg condor or a double stage condor, which is I would sell the put credit spread first because I know that the price is going to move up. So I sell the put credit spread first, probably around 109 and 102, right? So I'm going to do 109, 102 credit spread. Now, I don't want to be doing this too far out. Okay, so I might do it for this time. So 109, there's not a lot of premium there. Let's look here, 109. Let's imagine we can do it here. So if I go 109, I'm going to sell an iron condor. So my put strike is going to be 109, 108. And then on the call side, I would wait until the stock reaches the 3rd Keltner channel. The call premiums are going to be high by that stage. I will sell my call side of the condor up here, all right? If I sell it now, there's no premium. So I need to wait. I need to wait for this to rise. When it starts to stall, then I put the call credit spread on. By that stage, this put credit spread might have actually given me quite a lot of profit. I can reset this one. I can bring it up in a strike and then have my condor in place. Or I can close this off as the bull put spread, take my profits, sell the call credit spread for the way down, wait for this to come down, take the credit spread profits, and then put on a put spread. So the condor doesn't have to be together. It could be one at a time, depending on how you want to trade it, right? But you've got to watch carefully because if this stock explodes up and you've put your call credit spread somewhere here and we have an extreme move, sort of 3 times ATR and somewhere up here, that call side's gone. You lose, especially if you've got the duration wrong. So it's a fine line between getting your strikes right and getting your duration right. So this, to me, because of the risk of an upside move, would not make this a candidate for a condor in my rules. It would be a candidate for a bull put spread or a bull call spread. All right, so I've got a bull call spread already on here. We could do a bull put spread to finance that trade and we're done. All right, so 1 debit, 1 credit. Let's look at a stock that might not move.
What kind of duration do you like on the condors?
Honestly, if I could be in and out in 2 days, I will do it. And I never target 100%. If I've got a double condor, so I've got my credit spread and I've got my put spread at the same time, I will probably target a 50% return. That's it. So I don't treat them like credit spreads like we normally would, which is a 70% profit target and all of that. The reason is I'm taking double risk, right? I've got the risk on both sides. I can only lose on one leg, all right? I can't lose on both legs on a condor, all right? Because I can only lose when it starts going over the short on the one side and below the short on the other side. It can't be above and below at the same time unless I've done an iron fly, which is a different strategy. So if I do an iron fly, the mid strike's the same. When I do a condor, my short strikes are different, right? So keep that in mind. So with this one, I wouldn't do a condor. What I would do is look for something that's got less propensity to move up, right? So in my little thing here, I'm trying to avoid the ones that have got the green. I'm looking for the ones that actually have no red. I don't want a squeeze. I'm looking specifically for stocks that don't have a squeeze. There's nothing there. They're just going to chop. They're just going to be horizontal. So let's pick up one here. Let's see CHTR. These are expensive stocks, so sometimes the premium is quite good. So here's an interesting one. We have this choppiness that's happening here. The stock is trading underneath the ATR. It's within the band of the market maker move. There's no squeeze. There's a squeeze forming, but we've got downward momentum. The color of these histograms has changed color, right? So now we know there's a bit of an exhaustion play. We've got a buy signal here. We've got a buy signal on overbought. IV is fairly low. So again, here, I'd have to do this probably for next week. So there's not a lot of open interest, right? So take a look at this column. You can see there's a lot of interest at the 650 level. And if I look at the expected move of 22, that puts it at 659. That looks like the market is thinking, you know what? That's pretty much where the market thinks the price is actually going to move, right? So if I take the break even there, 656, I would have to go somewhere above that 656 in order for me to just build in a little bit of safety on my Condor, right? So my upside movement would probably be around 660. Okay, so if I did the 660, I go here, 660 is above the 2 Keltner channel. That's still too close for me. It's still a bit too close because of this overbought signal, oversold buy, and that rising momentum, plus the squeeze that hasn't fired. This dot is there still. I'm a little nervous on this one. I would probably be safer going somewhere above my 3rd Keltner channel, somewhere at around 680. If I did a 680, not a lot of premium for next week. Let's go out one extra week, 680. Okay, let's see what we could do here. So if I sold an iron Condor for 2 weeks out, 680, 685, and then on the put side, I would probably keep the put somewhere around 6. What's the midpoint here? This is the 10-day moving average. If we kept it, I think that this is probably a better support line here, which is in the midpoint of the Keltner. So I'm going to look at 620. So this might land up not paying a lot of money. 620. 620 is my short. And my long is going to be 617. I just want to see what we're going to get now. So I can't even get a credit here. All right, so let's see if I drop this a little further. Now I'm starting to get credit. So 680, 690. All right, let's see. So this is going to cost me $730 in capital for $262 in income. So that's around 30%, somewhere around there. So I would be looking to make 50% of that. We could increase this a little bit.
What kind of risk reward do you like on those Condors?
You know, I try and use a 2-for-1. So if I'm risking 1,000, I want to make at least 500. Mm-hmm. But you've got to, you know, with this, it takes a lot of work. You can see it's a bit of a mental effort, right? It's not as easy as looking at a chart and just doing a one-sided trade. You know, if I was going to do a bull put spread, it would be pretty easy to just go 602 and 582. Let's go 600, 580, and I go out 30 days. You know, if I go down here and I do a bull put spread, you know, 602, 580, 585, you know, here the risk rewards are not very good, but you can see it's a lot easier on the mental effort. When I look at the graph, you know, it's visually much easier to calculate. When you start doing the Condor, you've got to make sure that you understand the risk to the upside and the downside at the same time. So it can be quite complex. That's why it's not something I would teach a beginner until they understand the dynamics of credit spreads, because you basically have to know how to make money using call spreads and money making put spreads, because those things, when you start combining them, they become a little bit more complex from a sort of the calculation kind of perspective. A lot of beginners get stuck in a yield trap. So what they'll do is they won't care about the strikes insofar as they will go and care about the premium that they get. So they will willingly lower the strikes in order to get paid more money without really recognizing that they're taking on more risk. And when this blows up, they go, oh, the strategy doesn't work. No, the strategy works fine. You just did it wrong. You know, it's like arm bars work, but if you put your leg up your own butt, it's not going to work, right?
Exactly.
I think there's so many parallels between jiu-jitsu and trading in terms of how you teach people.
Mm-hmm.
Like, you know, this is the thing that the hack guys haven't really worked out, is that you can't take a guy, put him in a boxing ring for 5 minutes and then go tell him to fight Conor McGregor. You know, it's all
like those. That's like those weekend self-defense courses.
Oh, geez, don't get me started. It's you know.
Yeah, it reminds me of that.
Yeah. So I would really encourage people who are watching this, just be very, very conscious about what you're listening to. And, who, you know, a lot of reasons why people say it's easy is to get people onto their chat groups and subscribe to their YouTube channel so that they can put advertising on and all of that. You know, I'm not like that kind of guy. I would much rather people traded honestly. Like, here's the real story behind stuff. Okay. And if you're going to, like, there are 30 to 40 different strategies that you can play in options. All right. Don't trust everything your broker tells you. Your broker just wants you to hit keys. You know, so if your broker is saying, do this, do this, do this, just be careful, because your broker is going to make money every time you touch the keyboard. You know, you've got to know what strategies work consistently for your personality. You know, if your personality is not, you're not interested in chop, right? You can't handle this. Don't do condors. You can't do condors because the chop will kill you. You'll be kicked out of trades way too early. You've got to let trades work for you. And if your personality does not fit the volatility profile of that trade, you're going to get screwed. You effectively will screw yourself. It's not the trade that went wrong. It's you. You know,
so
like,
when you were making the point about jiu-jitsu, where it's like you have to sort of find your game. Like if you're a long-legged, lanky guy, you know, having a really good guard game, De La Riva guard, that kind of stuff, it's going to work for you. But if you're
absolutely
kind
the
of
same thing
short,
here.
Yeah, if you're short and compact, you know, maybe butterfly guard.
This is the stuff, and you know, you find a lot of beginners just want to trade to make money. I mean, it's the same thing that comes down to what metrics do you measure in order to determine how good you are as a trader. You know, people look at their P&L. I go, well, P&L is only one aspect of it. And your P&L is often a function of the market. So if the P&L, you know, if spreads widen and your P&L suddenly looks a little bit different than it did a couple of months ago, are you measuring the metrics that will measure your effectiveness as a trader? Your effectiveness. It's not your profitability. Your profitability is only like one thing. Like, you know, it's like saying you can be a blue belt in jiu-jitsu if you can do 50 push-ups. Okay, you can do 50 push-ups. That's fantastic. But you know what? Everything else about you sucks. You know, you can't shrimp, you can't roll, you can't invert, you can't do anything. So, but your 50 push-ups is great. You know, well done. Right. It's the same thing. If you're not measuring what counts, you know, what's your win rate per strategy? How many times have you done a bull put spread and lost, and why? And if you don't know, you shouldn't be trading that strategy, because you might be inadvertently setting them up wrong, losing, and then blaming the strategy, not yourself. You know, and that's where the problem starts to come in, right? It's like those guys who go, oh, my instructor hasn't graded me for 19 years. I had that when I was a white belt. I was a white belt for 12 and a half years. What I didn't realize was I sucked at jiu-jitsu, and I kept blaming my teacher. I was like, my teacher needs to grade me. And, you know, what I realized was I was just bad. You know, I didn't want to take accountability for that. So, you know, it took me 12 and a half years to get off white belt. I was the only zebra white belt in the history of jiu-jitsu. And then all of a sudden, I made that look cool. Now everyone's like that, But if you remember back in the 90s, there was no one to grade us.
Right. Yeah, that was
the
people had ranked for a long time just because there was no one around. They just wanted to grapple. So these really, really dangerous white and blue belts. It was kind of.
Oh yeah. I remember I was 12 years as a white belt. And then when I got my blue belt, I remember getting whipped in the gauntlet. And then I was a blue belt for, oh man, when did I got my blue belt in 2007? No, before that. It was before that, 2005. I think it was 2005 I got my blue belt. And then I got my purple belt 2 years ago. So I've been training for 20-something years, and I haven't even reached a brown belt.
That 12-year white belt thing makes me think of that movie, like Billy Madison, with you sitting in the chair with all the kids.
Look, I've told my son and my wife, I said, you know what, I will probably be a black belt in death. Like, I think I'll get mine posthumously when I die. I think I'll make sure that my wife invites you to my funeral and you can throw a belt at me in the grave. Okay, like just chuck it in. So there you go, big guy. At least I know I got it. I died getting my black belt.
Is there a particular? We're pretty close to time, but I was wondering if there was a particular setup you're looking at this week that. I mean, we got kind of a crazy market, but
yeah. Well, I think, the one trade that I really like. I mean, look, I believe in trades of a lifetime, right? So there are going to be a few trades that will get set up over the next couple of weeks as the market sort of finds its rebound, particularly once the interest rate debacle has been settled. You're going to see a reversion back into technology stocks, right? So this is one trade that I really like, which is SOXL. It's the triple leverage semiconductor ETF. This is not a trade for everyone, right? This is not something where you must go and bet the house and whatever. This is just one of the approaches that I take. Whenever I get a signal, now I don't use this the same way that I would do an income trade. What I usually look for is I'm going to redo this thing. So I will put a Fibonacci on from the highest high, recent high, to the recent low, which is here. All right. And what I'll do is I'll look for these indicators. These little green indicators are where I've got volatility edges. So it's telling me that volatility is moving in my favor for an entry for the long side. Okay. It's a code that we have. So I got a signal the other day. I waited for a second signal. So usually I will wait for the second. I got my second signal and I've got a slingshot forming. All right. So I've got reduced downward momentum. So this is getting exhausted. I have a low compression squeeze that's starting to form. Now I've still got bearish signals. I don't have a buy signal down here and my IV is still pretty much in the middle. So the trade that I like to do is I go out far in time. Okay, I go out quite far and I will buy a out of the money put option. So at this point, I bought this one's the in the money one. I bought the 32. All right, this one here. And I paid 10.20, it's at 10.85. I'm not looking to trade this. What I'm looking
for a put or a call option.
That was a call option.
Oh, okay.
So I just buy the call and I hold it. And at the end, if this stock is trading at the expected move, it will be around $57. At $57, I will make 15 profit, right? So that will be a sort of 1.5 to 1 trade for me. But over time, I'm just going to accumulate. And I start accumulating. So maybe this position might end up being a 4%er or a 3%er in my account, but it's trading the trend back up. All right, that's what I'm looking for, because semiconductors got absolutely smacked, right? So this is one. I also look at Google. I think Google is a stock that's worth watching. It tends to be a bit lazy. I mean, it's one of those stocks that's forgotten what type of industry it's in. So I haven't got a trade in here yet, but I'm watching the squeeze form. All right, so I've got a high compression squeeze. I had a bit of a slingshot. It fired short, bearish signals. I'm really looking for this to move back up. All right, I'm looking for it to start trading in that zone in the first Keltner channel, and then I'm going to probably do something on Google.
These are really long dated trades, correct?
Yeah, sort of 90 days, 100 days, buy a long call. If there's an opportunity to finance it with a bull put spread, I'll do that as well. But this is what you need to be aware of at the moment. There will come a time when the market will turn around. So when it turns around, you want to be in those trades, right? You want to be a little bit early. I'm trying to be a little bit early on things. The other thing worth looking at is I sometimes take the indexes, and based on the indexes will tell you where the opportunities will lie. So right now, what you want to be doing is avoiding any short duration trades in any of the bearish trending sectors, right? So technology for short term is bearish. Where the opportunities are lying is in finance, communication, so stuff like Netflix or Twitter, things in that area, materials, FCX. We have a trade on with Freeport McMoran on the copper market. If I look at the XLC, we have a position in XLC. For XLF, we don't have anything in that one. For KBE, we've got positions in SBNY, which is the signature bank in New York, which is largely a Bitcoin play. So we are pretty much leveraged on Bitcoin at the moment. We don't have Bitcoin itself, but we have stocks that participate in Bitcoin as it moves up. And Bitcoin is one of the strongest markets at the moment. You know, it's just bullish, bullish, bullish all over the place.
And it's above playing the individual. Do you play the indices much?
I do play the indexes at times. I find the indexes easier to use condors on. Mm-hmm. So, you know, rather than having a stock that could bounce up and, you know, fall down, I would rather trade a condor on the index. But as far as the sectoral indexes go, I'd rather pick the strongest stock in the index. Like for me, that's the way I will trade individually. But for beginners, I would say, you know what, if the index is moving, just go with the index. It's safer for the beginner. So I would definitely be looking at things, you know, here, XLF, XLC, XLB. Real estate, I don't like. It's boring. You know, I just don't like real estate at all. I don't. Ever since my landlord wanted to sell this house, I'm like anti-real estate completely. So that's it. I don't care anymore. No, I'm kidding. It's just a sector that doesn't really appeal to me. But definitely the Bitcoin stuff is worth keeping your eye on. You know, Bitcoin this morning, let's see, Bitcoin futures down a little bit, up at $55,000. Oh my gosh. Imagine paying for pizza. There's this thing about Bitcoin and pizzas. There was some dude who paid for pizzas with his Bitcoin like 20 years ago or something. He paid 10 Bitcoins or something like that. It was like, I don't know, a couple $1 million for 2 pizzas. Like, you know, anyway. So there's the bell. Look at that. All of it's just, it looks like a corn dog. This looks like a corn dog that's been dipped in mayo and mustard and what have you.
Yeah.
Just signals all over the place.
Well,
yeah,
Chris,
I guarantee to give you a headache. Eh? Cheapest.
Talking to you as always, man. Good luck today.
Thanks, buddy. I'll see you next week.
Yeah, absolutely. Take care.
All right. See you, Brian. Have fun.